Hey, welcome back. It's Jason Walty here, and here's our latest housing market forecast. This is because Fannie Mae just announced their latest housing market forecast and real estate market predictions through 2023. And they cite some concerns they have, and therefore they actually downgraded their housing market forecast they actually announced previously, which was 1 month ago. So with that said, I want to share this report with you guys in today's video. And of course, if you guys get any value out of today's video, then please hit the like button. I greatly appreciate that. Also, if you guys haven't subscribed yet, please do so. I post frequent housing market updates so you guys can be more informed, and I actually really enjoy making these videos for you guys, as you guys can probably tell from my videos I post on my channel. Anyways, let's go ahead and dive right into the video here. This was announced last week, and this is from Fannie Mae. And this headline really reads the whole story here, or summarizes the whole story here. It says housing activity is expected to soften through 2023 due to higher mortgage rates and high home prices, or home price gains, they said. So Fannie Mae is now expecting total home sales, which include existing home sales plus new home sales, so total home sales, to decrease 16.2% this year, which is pretty remarkable. And I have more news to share regarding that here in just a little bit, because I'm going to be sharing their predictions for mortgage rates, home sales, housing starts, and much, much more through 2023. In any case, they go on to say the following here. So a decrease of 16.2% in home sales, and this decline represents a further downward revision from last month's forecast, because last month they were calling for a 15.6% a decrease in total home sales. Now they're calling for a 16.2% decrease. And they cite this is based on a recent incoming data that point to a faster slowdown in near-term sales than previously expected. And this is despite mortgage rates having moved lower over the past few months. So I really want to provide some additional insight regarding this, because yes, mortgage rates have decreased ever since basically the middle of June, but that's not really the full story though, because mortgage rates have actually been increasing this month. So here's what I want to say regarding that, or here's what I want to share regarding that. So at the time of this video, which is August 29th in the morning hours, the 10-year Treasury note, the yield on that is tied more directly to mortgage rates than really anything else. So at 3.11%, this is much higher compared to 1 year ago. 1 year ago, the yield was basically 1.3%. So the yield has been increasing greatly. And that's why we've been seeing this huge uptick or huge increase in mortgage rates. So at the time of this video, again, which is the 29th of August, the average 30-year fix is at 5.95%. And interesting enough, on a side note, this is basically the same rate for a 5/1 ARM. Meaning your rate is fixed for 5 years, then it becomes variable or adjustable for every year after that. So this is pretty interesting on a side note, because the spread between a 30-year fixed and a 5/1 ARM has basically been in the range of 0.8% to 1.1%. And that's why I have been reporting to you guys that more people have been moving to ARMs, which are more risky loan products, because your mortgage payment's gonna be a lot less than a 30-year fix. Anyways, it's interesting to see that the rate is basically the same compared to a 30-year fixed. So one more thing I want to mention regarding mortgage rates is the rate right now. By the way, these are average national rates for people with exceptional credit at 5.95%. This is the highest rates since late June of this year. So when we're talking about mortgage rates decreasing over the past few months, that really doesn't tell us the full story though, and I'm going to be sharing that with you right now. So if we were to compare mortgage rates ever since the middle of June compared to now, yes, mortgage rates have decreased because the average 30-year fix as of June 14th, according to the Mortgage News Daily, was 6.28%. It decreased all the way down to basically 5% or 5.05% at the beginning of August. So it decreased greatly, but this run up though we're seeing right now in August is something we should be talking about, and something worth noting here, because the average rate for a 30-year fixed rate mortgage has increased about 90 basis points since August 1st of this year. Therefore, it's true that mortgage rates have decreased since the middle of June of this year, but this run up here is something definitely worth noting, because this could hamper home buying demand. All right, so going back to Fannie Mae's forecast here, or their article here, it says a modest recession is likely to emerge in the next year as a labor market softens and the effects of tighter monetary policy by the Fed are more acutely felt. So in regards to their comment here, I'm stating that we're going to see a modest recession that's likely going to emerge over the next year or into next year. Obviously, there's some different definitions regarding a recession, right? A lot of people are saying we are currently in a recession because we've had 2 consecutive quarters where we've had negative GDP. So a lot of people believe that we are currently in a recession. But regardless of whether we are in a recession now or going to be going into one, I'm going to be really looking at and focusing on the labor market, because if more and more people lose their jobs, or if the labor market actually does soften here, that could really impact our housing market if more and more people lose their ability to afford paying their mortgages. And as I mentioned in a previous video though, people who do have a mortgage that's still backed by the federal government, meaning you have a FHA, USDA, a VA, or a loan that's backed by Fannie Mae or Freddie Mac, you still can enter into a loan forbearance program, which is basically the program that allowed homeowners to stop paying their mortgages that was basically passed in March of 2020 thanks to the CARES Act. Therefore, because people can still enter into a new loan forbearance program, this could potentially soften the impacts we see regarding the housing market downturn. Now, don't get me wrong here, because I believe we're not going to be seeing a housing market crash, but we are seeing a housing market correction right now. And according to Doug Duncan, who's Fannie Mae's Senior Vice President and Chief Economist, he stated the following here: housing remains clearly on the downtrend and has been for several months now, due to the combined effects of outside home price increases and the significant and rapid run-up in mortgage rates. In other words, for months now, we've been seeing a housing market affordability issue in the US, and this is one main reason why we're seeing this pullback in home buying demand. And speaking of housing market affordability, we continue to anticipate a slowdown in home sales activity, according to Fannie Mae. Housing affordability is still a major constraint for potential homebuyers. And have a look at this, because this is pretty eye-opening. As a share of the median household income, our estimate of the principal and interest payment on a median priced home is still just below the highest levels since 2005. What they're getting at is that home price gains, or the appreciation of home prices, has been far higher than the gains we've been seeing for household incomes. And therefore, because of this, we've been seeing this housing affordability crisis in the US. Additionally, Fannie Mae believes we have a strong lock-in effect amongst current homeowners. So many existing homeowners are likely reluctant to move due to having a current mortgage with a rate well below current mortgage rates. You actually can see this when looking at the data as well, because we're seeing a lot of people who are not very motivated to list their house for sale, given the fact that home prices are very high, but more importantly, mortgage rates are very, very high as well. At 6%, I mean, back in January 1st of this year, rates were about 3.3%. 1 year ago, rates were around 2.8%. Now they're 6%. And this is causing a lot of people to not list their houses for sale. And the data actually supports this. So for the 4 weeks ending August 21st, according to Redfin, the number of new listings is actually down 15.4% compared to 1 year ago. And on top of that, we've had fewer new listings compared to 2021 ever since July of this year. Of course, a lot could change in the months to come. If our labor market becomes very, very weak, a lot of people lose their jobs, we could see this actually move in the opposite direction. And speaking of existing homeowners having rates below current mortgage rates, Fannie Mae estimates that about 84% of homeowners right now have rates of at least 100 basis points below current mortgage rates. What they're seeing right here is that approximately 84% of homeowners right now have mortgage rates of less than 4.22%. And because rates right now are about 6%, this is giving a lot of people not a whole lot of motivation to list their houses for sale. Of course, as I always mention, a lot could change, but this is based on the data we have right now. So with that said, I actually want to share this table with you guys. This is basically their summary for their housing market forecast as of August of this year through 2023. So let me give you kind of the rundown regarding their forecast right here, or their stats they're sharing in this report here. So they basically give a forecast for total housing starts, and they break it down by single family and also multifamily. And they also provide some insight regarding total home sales, both new single family and also existing home sales as well. They also provide a housing market forecast for home prices based on their HPI, or their home price index. They also provide some insight regarding mortgage rates and also for single family mortgage originations. So let's first talk about total housing starts. By the way, these are seasonally adjusted annualized rates right here. So total housing starts in 2021 was a 16% increase compared to 2021. But for 2022, they're calling for a 3.4% decrease compared to 2021. But look at this turnaround in 2023. A 15.2% decrease in 2023 compared to 2022. So a big decrease in housing starts. But total housing starts, which again is the beginning phase of the construction of a brand new home, is made up of single family plus multifamily. So take a look at this. Single family housing starts, they're calling for that to decrease basically every quarter until we hit the second quarter of 2023. But overall, they're calling for an 11% decrease in single family housing starts in 2022, and then decrease again further by 14.3% in 2023. In stark contrast though, look at multifamily. Multifamily increased by 22% in 2021. They're calling for that to increase by about 15% in 2022, and then decrease 16.9% in 2023. So 2023 is an interesting year here because they're calling for a big decrease in housing starts for single family plus multifamily, which is drastically different compared to 2022, which is basically flip-flopped. A decrease for single family, but a fairly big increase for multifamily. They're also calling for a significant slowdown in home sales as well. So total home sales, which include new and existing home sales, they're calling for that to decrease by 16.2% this year and decrease to 10% or decrease by 10% in 2023. So for new single family, look at this, decreasing by 18% in 2022. It decreased by 6.2% in 2021. And also to decrease by 4.9% in 2023. The real estate market predictions is also calling for existing home sales to decrease by 16% this year and a decrease by 11% in 2023. So they're basically calling for 5.1 million existing home sales in 2022. If you guys missed my previous video from yesterday, Zillow is calling for 5.3 million existing home sales in the US this year. My personal prediction is calling for 5 to 5.1 million existing home sales this year, which coincidentally is basically in line with Fannie Mae at 5.14 million houses. In regards to home prices, Fannie Mae's HPI, or their home price index, take a look at this. In the first quarter of 2022, their index actually increased 20.5%, which is absolutely insane, far higher than 2021 for any of those quarters there. But look at this though. In Q1 of 2023, they're only calling for an 11.3% increase compared to the first quarter of this year. So they're calling for their HPI to increase by only about half as much compared to the first quarter we saw in 2022. Also look at Q4 of this year. They're calling for a 16% increase compared to the same quarter in 2021. But look at 2023 in Q4. They're calling for a 4.4% increase compared to a 16% increase in 2022. And that's more or less in line with their estimates for 2023 as well. So for 2021, their index actually increased by almost 19%. And then they're calling for that to increase by 16% this year, but only increasing by 4.4% in 2023. Also, in a side note here, they're not calling for a decrease in home prices or their HPI based on a quarterly year-over-year basis. All right, let's talk about their predictions for mortgage rates through 2023. So take a look at these rates in 2021, which is pretty astonishing. Every single quarter, rates were basically around 3%. Again, these are for average 30-year fixed rate mortgages. So for Q1 of this year, the average was 3.8%. For Q2, it was 5.2%. But look at this. They're calling for basically mortgage rates to basically be flat for the remainder of the year. actually decreased to 4.8% in Q4, coincidentally. And also for mortgage rates to basically decrease through 2023, which is pretty interesting. They're also calling for the average rate for 2022 to basically be 4.7%. And in 2023, they're calling for that to be 4.5%. I actually would love to hear from you guys regarding this. What do you guys think about their predictions for home prices, housing starts, and home sales, and also for mortgage rates through 2023? Comment below. Also, if you guys got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day and look forward to seeing you on the next video.